Hey, well, will you be able to afford a home in 2025? That's what I'm attempting to answer this week on the Housing Nerd. Welcome to my daily housing crash update. My name is Jason Ferrier. I'm a realtor, I'm an investor just outside of Columbus, Ohio, and I am a housing nerd. So let's dive into some details here because all this week I've been reviewing experts and what they're projecting for 2025 home prices. Will home prices go up? Will they go down? What are people thinking is going to happen next year? And not only that, what I'm doing this week is I'm comparing the experts' predictions from 2023 for 2024 home prices for the home prices this year. And then I'm going to look and find out, all right, are these folks actually correct or are they way off? I thought that would be an interesting kind of exercise to share with you guys. So welcome. Thanks for watching. Please comment below in this video if you have any questions or thoughts about the housing market or home prices. You know, if you're out there looking to buy, sell, invest in real estate, what are your strategies? You know, how are you beating the home prices right now? And then stay tuned to the end of this video because I am going to talk about some strategies you can use to actually find a deal, find something that maybe, you know, off market or a discount on an actual house that you want to buy, maybe even an investment property. So let's get started. The How I'm going to do this is I have this spreadsheet pulled up here because I created this in Google Sheets. And basically, on the left-hand side, you have the different experts like Morgan Stanley. And then you've got the 2024 housing market prediction, what they said was going to happen in 2024 with home prices, what actually happened in 2024, at least year to date, as far as we can tell. And then the 2025 housing market prediction from that expert. Now, one of the things I did was I used in the actual column, I used the the percentage of median home price increase based on what type of price index that analyst uses or that expert uses. So, for instance, I think Morgan Stanley and Apollo Global, for instance, use Case-Shiller, and then others use their own algorithms. Obviously, CoreLogic has their own algorithm too. So that's how I'm coming up with some of this information. Now, the basis for a lot of this analysis is this article from Resi Club Analytics. So I kind of took what Lance did in this article recently, where he actually shows the prediction of 16 different forecast models for home prices next year. And then I kind of looked at that and came up with this idea for the spreadsheet. So I'm going to kind of use a combination of those and we'll go through some of these predictions. So the first one is we're going to do CoreLogic. So CoreLogic predicts that home prices are going to grow 2.4%. 2.4% in 2025. Now, how did they do in 2024? Well, they projected that home prices would grow 2.9% in 2024. They actually grew 3.4% according to CoreLogic's website. And all these links are in my description below if you're on YouTube. If you're watching this on Facebook, I don't put links in there because Facebook will suppress it. So watch this on YouTube. Facebook is for, 10-second attention spans. So jump into YouTube, much more robust data on the long form YouTube platform. So you can see here that CoreLogic, thinks, hey, home prices are actually going to go up 2.4% in 2025. That's what they think. Now, to kind of shed some light on why they're thinking that, because I wondered, hey, why are they thinking home prices are going to go up like this? I jumped into the CoreLogic article and took a look at one of the quotes from their chief economist at CoreLogic. According to Selma Hepp, Similar to much of the housing market activity, home prices continued to mostly move sideways in October, a slight home price bump after late summer declines reflect the rebound in home buying demand resulting from a short but effective decline in mortgage rates. Still, as we continue to bump along during the slower time of the year for the housing market, home prices are not expected to reveal much about what's ahead for the spring home buying market. In the last few years, though, springtime has seen home prices jump higher than before the pandemic, despite elevated mortgage rates. Now, one of the other things they go on to say is that I'll find it really quick. Oops, right here. So let me highlight this. I should have read this earlier. Despite the price decline seen in certain areas of the country, overall national price growth is expected to continue at a muted pace. Still, forecasts suggest that national single-family home prices will reach a new peak level in April of 2025. Currently, the median price for all single-family homes in the U.S. is $385,000. So they're saying, hey, home prices will be higher next year than they are this year. There's no crash. However, the home price growth is nowhere near what it's been over the last, few years, 2020, 2021, 22, and 23. So they're saying you're going to see muted home price growth. Now, the question is, are they right? Well, again, we go back to this chart that I created, and you can see CoreLogic, right? They projected that we would do 2.9% this year. We actually did 3.4. Next year, they're saying 2.4. So will they be right? Well, if they're anywhere close to where they were this year, which, they're like a half a point off, I would think maybe they are correct. I mean, their forecast to me is kind of, I don't know. It's kind of normal, right? It's not like they're expecting a ton of growth. But one of these players expects a ton of growth next year in home prices. I'll get to that in a minute. So that's CoreLogic. Now, HousingWire, our boy Logan over at HousingWire, I think is owned by Altos Research. He projected that we would have a 2024 home price growth of 5%. We're actually at 4.3% according to HousingWire's data. So he's a little under what he projected, but not that far off either. 2025, what does he think is going to happen? HousingWire says 3.5% growth in home prices in 2025. So let me go to what HousingWire is thinking. HousingWire says the forecast produced by the media publication, which owns Altos Research, expects U.S. home prices to rise 3.5% in 2025. Analysts at HousingWire write that these are national views for home price changes. Obviously, local markets vary in performance. In general, the weakest home prices in the U.S. are those that have the greatest increase in unsold inventory. Imagine that. Most of these markets are in the Sun Belt growth cities. These cities had significant inbound population migration from other states over the last decade. This migration has stalled since 2023, with fewer buyers moving into town. Unsold inventory of homes on the market is piling up, leading to downward pressure on home prices. And again, this link's in my description below. You can go to Lance's article on Resi Club. I'd encourage you to check it out because he has more information here and some links. But looks like HousingWire saying, hey, where inventory is increasing the most and sitting on the market, that's where you're seeing home price growth stall. No kidding, right? Like, who didn't know that? Who didn't know that higher inventory would equal lower prices? That's good. That's good to see that confirmation. Now, that helps you if you're in the housing market looking for a home to buy, or you're wondering when home prices are going to crash. Look at inventory. That's what you have to do. So to like put your blinders on and pretend that inventory isn't the issue is crazy, because you have to have more homes on the market. You have to have more stuff on the shelf, right? You got to have more inventory on the shelf to drive prices down. Less inventory on the shelf, prices get higher. That's just how it works, folks. Okay, so that's HousingWire. So now we know CoreLogic, we know HousingWire. Let's go back to our little chart here. See who's next. Goldman Sachs is next. So Goldman Sachs in 2024 said home prices would grow 1.9%. What did they actually do? According to Goldman Sachs, they went up 5.5%. Okay. 2025, they're saying 4.4% growth. So, what did Goldman Sachs say about the housing market? So, here they say, our analysts increased their forecast for U.S. home price appreciation to 4.5%. They've actually increased their forecast for home price appreciation. So they've gone from looks like 4.2% earlier this year. They said it would, next year would grow 4.2%. Now they're saying 4.5%. They've gone up. Now, why is that? This goes into more depth than what CoreLogic and HousingWire did, but it's really interesting, I think. And I won't read all of it, but a couple of these highlights say, when asked about why they've revised their forecast upwards in home prices, Goldman Sachs said it's a reflection of the fact that the labor markets appear to be loosening, which gives the Fed more room to cut. Our economists now forecast the Fed will deliver 3 consecutive 25 basis point cuts at the remaining meetings this year. Now, if we thought the ability of home buyers to purchase houses would diminish because of a worsening economy in which people lose jobs and income and are therefore unable to pay a mortgage, rising prices would be bad news, obviously. But we're not seeing higher permanent layoffs, at least not yet. The reason we think right now that bad news is good news is that rates are falling because of concerns about employment, and we don't think those concerns will really affect the housing market without income loss. All you're really seeing is the cost of taking on a mortgage is coming down because rates are coming down, right? To that end, we've already seen substantial improvement in funding cost. Then they go on to talk about interest rates. We understand that. Then they actually talk about the home price appreciation forecast compared to recent history. And they point out the growth in home prices has really been resilient. At the start of the pandemic, there was a lot of concern that prices would decline. How many people did you see on YouTube say home prices are going to crash because of higher rates? Home prices are going to crash because of the pandemic. And they go on to say the opposite happened. There ended up being a massive surge in household formation, which created an organic need for housing. On top of that, it was also a time when there wasn't a ton of supply, both in terms of existing inventory and new builds. Those factors in the supply and demand sides led to the strongest home price growth we've seen in the country's history, around 20% on an annualized basis. Over the last year, home prices have grown about 5.5%, which is a little above the historical trend of 5%. Clearly, there's still not enough supply, but it also goes back to the household formation story. Peak homeowner age is between 30 and 39 when people start having children. And we have a lot of people in America that in that cohort who need housing just based on where they are in their lives. So I'm curious what you think about what Goldman Sachs is saying. I mean, Goldman Sachs and some of these other forecasters are pointing to stable employment, right? Low supply as really the reason, and steady demand is really the reason why we're seeing home prices continue to elevate and go up. So if unemployment spikes, if people can't pay their mortgage or they can't afford to buy houses, what do you think will happen? Like, what's the first sign of that? Is the first sign foreclosures? No. The first sign mortgage delinquency? Not in my opinion. The first sign is new listings. That's where the rubber meets the road, folks. You got to watch new listings. And new listings, if you haven't been watching my channel, you should, because new listings are horrible right now. They're only up like 5% year over year. Not much at all. I think Redfin had them up last report up like 1-2% versus last year. There's not enough new listings. So there is not distress overall in the housing market, and it's showing because there's not a lot of new listings. If you can't pay your mortgage and you're like, I see on the horizon, I'm not going to be able to make my mortgage payment. What do you think the first thing is going to happen? You're probably going to list your home for sale. And a lot of these people have equity. So it's not a foreclosure. It's not a short sale. It's a sale. So you're going to see a lot of people put their home on the market if there's a lot of distress in the housing market. We're just not seeing that, at least not yet. Not saying it can't happen, just not seeing it. So that is Goldman Sachs. So Goldman Sachs says 4.4% growth next year in home prices. Tell me what you think about that. All right. Last but not least is Apollo Global. Now they're kind of a unknown or little known expert out there. You don't see them in the headlines a lot, but again, the link's in my description below. They do have a lot of good info on their website, so I'd encourage you to check them out. But they say home prices will grow 10.8%. 10.8%. I mean, look at this. Look at this last column here. Whoops, sorry. Look at this last column. They say 10.8% growth. So if you look at it and you go, all right, where are these folks coming in their housing market predictions? Yesterday, we did Morgan Stanley, National Association of Realtors, and Moody Analytics. Today, we're doing CoreLogic, HousingWire, Goldman Sachs, and Apollo. Apollo by far is the highest at 10.8%. They're saying home prices are going to go parabolic. I hope that's not the case. I wouldn't be shocked if they grow a good amount. I don't think they'll grow 10% or 11% if you want to round up. I couldn't find Apollo's 2024 prediction, but I did see where they put their actual growth this year in home prices. They have it 3.85%. So they're saying 3.85% happened in 2024. Now next year, 10.8. Holy cow. Now, why are they saying that? Well, let's look and see what they have to say. So Apollo Global Management says higher mortgage rates are weighing on demand, but the inventory of homes for sale remains very low, and housing demand is supported by solid wage growth, high stock prices, and high cash flows to owners of fixed income, including private credit. So they kind of have a little bit of a different take. They're saying wages are actually growing. The stock market is putting money in people's pockets and funding their 401ks or their IRAs or their portfolios or whatever. And demand is still, then that's causing demand to stay high. And there's still not a lot of supply. Supply end is still low overall. Now there's pockets where it's growing obviously more than others, but overall, and they're right, supply is still below pre-pandemic levels. I heard somebody recently mention that we actually have more homes for sale now than we did before the pandemic. That's not what the data shows, and I can't find a report that supports that. All the reports I see show that we have less active inventory right now than we did back in 2019, around 20%, according to the latest realtor.com data that I've seen. So it goes without saying, less supply, more demand, higher prices. They're going nuts, though. They're saying 10.8%. I'd love to know what you think about that. Is 10% insane? Is 11% insane? Seems insane to me. That's really high. I don't see that happening. But who knows, right? It could. So going back to my chart here are the predictions, right? You've got you got Morgan Stanley at 3%. You got NAR at 2%. Moody's is the only one that's projecting home prices to drop only by 0.4%, by the way. CoreLogic, 2.4%. HousingWire, 3.5%. Goldman Sachs, 4.4%. And Apollo stands as the most bullish at 10.8%. Okay, so those are the guys we have so far outlined as far as 2025. I'm going to do this again tomorrow, and I'm going to have 3 more or 4 more on there to round this out. I'm probably going to include, I'm trying to find housing market predictions from some YouTubers. So I'm going to go back through some videos. I'm going to look at probably Melody Wright, because she said that home prices would drop in 2024, and they haven't, obviously. And she was saying a cataclysmic drop in 2025. So we'll see if she's right. I'm going to put her on the chart. Real Estate Mindset and Travis. Haven't heard him make a call for 2025 yet. Although He's not doing much real estate videos right now. I don't see much real estate stuff from him at all anymore. Um, and I'm also going to put on there one rental at a time and see if I can put on what Mike Zuber thinks home prices will do in 2025. I'm obviously going to put my call as a housing nerd. I'm working on that now on where I think home sales, home prices will be in 2025. And then if you have a suggestion of somebody I should put on here or a publication or an expert, put it in the comments below and I'll put it on the list. I am going to do Zillow. I'm going to do Redfin. Um, I also have Fannie Mae and Freddie Mac to put on the list. So probably at least a couple more days of this this project to share with you guys. But I hope this helps. I hope this gives you some kind of idea of where home prices could go next year. Are they correct all the time? No. Although I will say, if you look at 2024 and 2024 actual, their prediction and actual, some of them aren't far off from where they actually landed, right? I mean, CoreLogic isn't too far off. HousingWire wasn't too far off. NAR was not horribly wrong, but they were the most bearish for 2024 of all the real estate, I guess, driven websites. Moody said this year we would drop 4.4%. We actually went up 5% according to them. They had the biggest miss, I think. Like I said, I couldn't get Apollo's prediction down here at the bottom. I couldn't get them, but hopefully this helped. And so I guess before I wrap up, I'd love to try to help you guys try to find a house if you're out there looking, and kind of some strategies. So the strategy I wrote down today is if you're looking to buy right now, you have to do things others are unwilling to do. What does that mean? Well, the theme this morning or the idea I put down was expired listings. Expired listings, meaning a house that was listed and then somebody took it off the market. So it's like, oh, I can't sell this at the price I want, so I'm just going to remove it from the market. And maybe they list it again next year, or maybe they decide to rent it out or whatever. But today, as we speak, I am calling expired listings for some clients, some buyer clients I have to find maybe a property that they can buy that is off market per se, right? So I'm calling houses and listings that expired to see if they're still open to an offer. And a lot of times, sometimes, well, a good amount of time, you can get a deal on those, or you can get a discount from where it was listed on the market. So that's a way you can find opportunities. Ask your local realtor for a list of expired listings. Either you reach out to those homeowners, which is fine to do, or have your agent reach out to them, or send them letters and say, hey, I saw your house was on the market. I'm still interested in it. Are you interested in talking? Give me a call. Anyway, hope that can give you some tools to find a house. All right. Let's see. I think that's it today. Yeah, I think that's it. All right. Again, tell me what you think. Apollo Global's housing call, 10.8% growth next year in home prices. None of these folks so far, none of the experts are predicting any type of home price crash. If unemployment stays the way it is right now, and we don't see a massive spike in, jobless claims and people who can't pay their mortgage, I agree that there's probably not going to be a housing market crash. But I'd love to know what you think. Comment below, share the video, like the video, subscribe to the Housing Nerd. I'm doing all this work, putting all these spreadsheets together. All you got to do is subscribe. All right. We'll see you tomorrow morning. I'm out of here.